nothing to bear and nothing to win, nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment, which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So it looks like we had a little bit of a retest of 30K region and then bounced back up to the upside. Since the last we talked, we are still in between the 618 and the 0.5 of this diagonal pitch fan to the upside after getting rejected off the 0.65 of this pitch fan mean reversion path, whatever you want to call it, to the upside on this Coinbase chart. Let's go into the heat map of high block and let's see what's in store for the liquidity. Well, what is the liquidity? Well, people leave their liquidity in the charts to get burnt to a crisp by the market makers, and we get to see where those characters lie in wait and who got burnt to a crisp using high block. So let's do that now on the 1 minute time frame. Okay, so we'll expand that, we'll lower that later. So on the 1 minute time frame, it looks like we had this retrace into some of these 100 million 100x pools. So we've basically just been range trading between these little short pools and long pools that make themselves more known over the weekend. Imagine if you're a hungry shark and you see a fish swimming in open waters and there's no coverage whatsoever. They just come and gobble those guys up. So this person who opened 87 million in shorts, as we drop down here, they opened it at this level at 30k, and maybe they had a laddered order or something of a short when we break down, and they just said okay, thank you, and they just came back and retraced into that 87 million.
Fatality.
Yes, and the market maker will show no mercy if you don't buy low and sell high. Normally you'd think to open a short here into resistance and not at the bottom and support. So are we going to see a retrace into the liquidity below or not? We need to expand our vision to the higher time frames. We do have some pinged liquidity still higher at 30,820 that we have yet to come back into. A free liquidation levels thing that you can check out, by the way, is coinglass.com liquidation data, and you can also look at their free heat map that they provide. They also show you where some longs to shorts would be possibly imbalanced at on the Binance OKX and Bybit charts. So you can look at the daily for that or a 7-day and see where those lie. Okay, so it looks like it gets more in long in short liquidity over up at 31.1 region, but in the overall thickness it gets thicker down to 29.7 here. There's more value at the lows. I don't know how to read it 100%, but there is charged ones like Kingfisher, and this one is free, so worth checking out. You can also see the long short ratio and who's long and who's short, also open interest and funding rates and so on. So all free stuff is can't beat that price tag. So let's expand our vision to the external liquidity pools. And let's go to the 7-day chart. All right, so we previously came back into both the longs and the shorts, and then we're finding some sort of equilibrium to ping in more of both to see where they want to go. Now there is a small pool of 5 billion plus down at 29,650 that coincides with what we're looking at on this heat map as well. If you want to see how it translates, they have the levels down here, so we can kind of use those to adjust your thinking on that. So this is where these pools are. 31.6 is a larger pool, and overall there is caked up liquidity leading the path to that pool. If they come down to stop out some of these guys down at 29.6 and recover that wick completely, that would be the ideal formation to stop hunt and then rise, to do the dolphin dip as I used to call it. And if they come to the monthly time frame, we previously saw a stab up at the 30 billion plus up here. They left 20 billion on the table to come back to for later at 31.7. We've been retracing into this liquidity here at 5 billion, basically 10 billion in this range on the monthly time frame. Now if you look to go lower, then there is some double digits down at 29.4 and below, and the entire path caked down to 24k also with double digits. In terms of imbalance on the monthly time frame, it is to the downside to retrace into some of these pools sub 29K. This also begins to start to be visible as you expand your vision to the external liquidity pools of the 3-month, and the 3-month also has that nice juicy liquidity down below. However, the most caked up region in the local range area is up in 31.8 and beyond, up to 33K. So if you look down below, there is some liquidity down here, the 22 million, 26 million at 29K. But from where price action stands, after you hit that, coming lower, unless you Bart Simpson all the way back down, the reasonable idea would be to come up to some of this juicy liquidity up above on the 6-month. Let's go check it out. The 6-month has more down below sub 24.6 and below. They do have that path paved to the upside. If they choose to accept it, they can go up to 33.6, and it starts to taper from there, still in the 100 billions, up to 90 billion at 33.6, 103 billion at 33.3, and so on and so forth, 100 billion at 32.1. So that path is also paved to continue, and I expect at some point it will go up to those regions. If we look at the 2-year time frame, this is where it starts to get red hot, because some of these trades that were open since back here that were getting funded as they dropped are now still contemplating whether to break even or get rocked. If they get rocked, they come up to this 33.2 and grab $450+ billion in liquidity. So this is where the external liquidity pool does scream at coming up to this region. Now, if they go down to the 29.2 and stop out some of this 100 billion first, that would give them the liquidity to boost it. So generally, if you go up to go down, and you go down to go up. So this stop hunt rise, which knocked out this 59 billion, allowed them to drop it down to here. So if they want to go up to here, it would make sense to come and stop out all the longs first, reasonably speaking. Let's go back to the monthly time frame and take a look at that pool as that wick appears on the chart, and then we'll go into the Binance chart and take a look at what is occurring. So on yesterday's stream, we did point out the idea of getting rejected off the 786 for the hourly reset and looking for a reaction at a certain level here. We went a slightly below the range here and got a reaction to the upside, again coming rejected off the 786. What is this math, you say, that we're getting rejected off of? The 786, the 706, the 0.65. Well, this is your trend-based fib extension levels. How does it form? You do an impulse, and then you do a retrace. And based off how deep the retrace is, the math will change its location, and based off how big the impulse is, that will also change its location of how spread out the math will be. But this will contain within the impulse and the retrace some idea of where it wants to go. So it went to this 786 and got rejected to recharge off some bullish order blocks, and it looks like it came back to the 236 entry model and then bounced off the 236. Now, this was not necessarily like it was an equal low to this candle here, which it also bounced off of, but also the math insinuates that it could come up to this pool. We laid out the characters yesterday about where these $196 million characters lie with their 50x comrades, so they could come back into this pool at some stage. However, if we go into there's some lower pools on this wick that coming back down to would also insinuate an idea to come down into recovery of this wick in its entirety. We still have some $300 to recover within that wick. And this rounded out price action does suggest that we do come down. This could be something to note. Now we can turn on our oscillators and see what's up with Momentum Master. Boom, boom, and boom. Link in the description for more if you want to take a look. Scroll down to features, toggle them at your leisure, see what it looks like in its entirety, or look at each component as we go over it. So if we go to let's start our descent. As we approach the weekly candle close tomorrow, I think it also coincides with the 5-day. We're going to go to a clean chart without the fibs and stuff, so we can just take a look at Momentum Master alone. All right, so the weekly time frame is above the adaptive and the weighted moving average here. This is a bullish signal as of last week candle close, trying to reclaim this. So they're coming back in to test the support of these moving averages, which we have not seen a reclamation of since January of 2022. And those also spawned a rocket ship, which sent us up a good 31% when we reclaimed those. Now, we did come up and get rejected off the baselines. At that time, we were experiencing extreme downside, and then we did reconfirm those and bounce off the adaptive. So if we find this adaptive as support, this could continue us to the upside. We also had another adaptive reclamation back here in 2020, where we claimed it and held for a few weeks and took off. Now, this was earlier on in its history, but this is another point in the charts to think about, this adaptive and weighted moving average reclamation idea. Granted, we are at the top of the Keltner channel, which is an ATR based Bollinger Band type idea, which is more accurate in my opinion than Bollinger Bands. So this is the Keltner channel, and if we are at the top, you can tend to gravitate back down to the center equilibrium, which we removed and replaced with this trend cloud. So this trend cloud is a 𝗥𝗲𝗃𝗃 formula, which also expresses the equilibrium price that it likes to come back and kiss. Similar here, it came out above the cloud and then came back and kissed it and continued. So these type of kiss continuation ideas, rise, retrace, continuation, ABC waves, whatever you want to call them, they are one and the same. All right, so coming to this point is an interesting thing. Where does the weekly candle close? Above these lines, or does it start to close beneath these lines at 29.8 and below? 30,000 is where this weighted moving average is putting you, 30,055. And if we look at our oscillators, we're getting that momentum to the upside on the stochastic RSI, and potential double top. We negated this alarm back here without we saw 2 more weeks of downside after the alarm, so the alarm did let you know properly, but we are crossed up to go up to the maximum regions on the Williams. And if we go to the 5-day time frame, which also coincides with that weekly candle close, we are attempting to hold above its own weighted moving average and the baselines, which we previously had a cross down event for how many days was that? 55 days. So we had like a 60-day retrace off that cross down event on the baselines that we pointed out to you back on Sunday, April 16th. And so we're starting to reclaim these essentially, and then starting to pose the idea of crossing up to push up further. So this is a bullish signal on the baselines if they manage to hold this baseline and bring them up to cross up again. Now this happened back here, and then you saw this surge up for so many days. 24% increase in 25 days. So if you get that cross up in a similar fashion here, where we had a cross down and a cross up, you could get that push further even though if it's at the overbought status, it could give you that nice momentous push in the last hurrah here. As it shows with these open, it still could give you a little bit more upside on the 5-day if it closes above these levels. Okay, so 5-day, while overbought, could give you some last spurt of something. And if we go to the 3-day time frame, starting to chill out here, giving back a little bit. We talked about how this average of the Williams needs to come up to the actual line of itself, similar to here on February 9th. It didn't immediately turn around here. It kept going until it came to a point where they were close, and it went to test whether it wanted to come down out of there. So this could also, we just had a 3-day candle close too, so that reset some of the oscillators, brought these down a little bit. So these coming up a little bit further ideally would show that this could go even sideways for a few more days, or even down a little bit, and build up momentum as this comes up closer on the 3-day. If we go to the daily time frame, the cross down event is still in effect. We had the cross down event poised for you on Sunday last week, and while we did see upside, we did see rejections off the baselines, stop hunt wicks off the baselines, and ultimately you've been seeing this downtrend of the suppression of the baseline out of the Keltner channel. We are now out of the Keltner channel. If we come back to the super trend on the daily / cloud kiss idea, we came out of the cloud, and if we come back to kiss the cloud on the daily time frame, that would bring us down to 28,591 area, also reclaiming some of the liquidity on the charts. If we go to that 28, what was that, 28.5, let's just say. So if you go down to 28.5, that takes you down to here. The pools actually start from the sub 28 region, so if you were to go down to that, you'd basically go to 29.8, as it seems here would be reasonable to think. And this could get suppressed by the Williams opening up here with the alarm down. So as this alarm has been confirmed and you're below the baselines on the daily time frame, you could see a suppression of the daily time frame with this Williams starting to come down and reset some of its overbought status on the daily time frame. So the daily time frame slightly bearish, even though this stochastic RSI is oversold. So don't be deceived just by the stochastic RSI. This is why we put them together with the Momentum Master B, and we also open them up half the screen, so you don't need to have it open all the time. I close it like this when I'm looking at price action, and then when I want to see it in conjunction, I open it like this and take up half the screen. Since there's like 4 or 5 oscillators inside of here, you might want to consider having it bigger and take up more screen real estate so you can really take an inspection of how they interact. Why do we overlay them like this? Well, particularly the money flow and the RSI. The money flow coming beneath the RSI like it did here suggests that it comes back to the RSI, and conversely, if the money flow gets above the RSI, it likes to come back to it as well. We'll get into that as we go into the lower time frames. But yes, you also have the leading MACD crossing down, which shows no signs of abating just yet. Still, the lines are separated in a manner here. If we open it up, you can see they crossed down last Saturday, and we've just been seeing them maintain this downward momentum in conjunction with the Williams. This could suppress the stochastic RSI on the daily time frame. Now, if we go to the 22-hour time frame, then we're starting to see that suppression in effect. Possibly the future of the daily would be like that, where you open up and come down, and it causes this suppression of takeoff. We are seeing the money flow disparity beneath the RSI here, which could start to come up back to the RSI. If we go open up the charts, we are beneath the cloud, and the cloud is tapering in a manner here, getting thinner and curving. This angle we also had for you on the Binance chart for the 12-hour time frame. We're posting a link about that, which we'll get into now. Basically, the 12-hour time frame was starting to curve in a manner here, and it even like met my expectation of the angle even further. If I correct it, it even went less volume than I was thinking. So this could be like so. So this thinning 12-hour idea, you're breaking down like this, breakdown, retest, and then you could be like breaking down to this wick or something at 29.5. Perhaps this could be a bearish retest, thinning of the cloud, come down to retest the wick here. Now, where did we do this before? Well, if you go back in time, if we go back to February, we had a very similar type idea where this came down strong, this came down strong, and then we came back and we recovered that wick, and then we basically traded within that wick, and then we came back and we recovered this candle, and then we built our way out, narratively speaking. And this took from March 17th to April 9th. So this was about 23 days of consolidation before we came out. For the most part, we did recover the wicks here, and so generally the second one went lower than the first one and consolidated within that wick to come out and trade fairly within that wick. So the idea of this wick not getting reclaimed and us just going up seems strange to me, because the wick, historically speaking, gets recovered in most cases. And so coming back to that wick and consolidating within that region before we send it would stop out all these longs in this time frame before we go up to that newer region, which would be currently 17 days of consolidation. Just an idea. Let's go back to the clean chart, but seeing this cloud taper on the 12-hour and this super trend, which has been holding since June 19th, this back-tested level of the super trend gives you dynamic support and resistance at 29.4, which also coincides with that idea. So even if you don't know anything about wicks and reclamation of the wick, like even just following this super trend idea is going to put you in line with that idea. And that's why we have a lot of these back-tested tools within the kit, so that you can just say, okay, if we hold this line, if we come down out of here and retest this super trend line and hold it, we're still bullish. So as long as we hold that 29.4, we're still bullish. And so why did I consider that we're still going to go lower, and this is a A, B, C wave down? Well, the 4-hour super trend, which also held since that time, has been broken. The 6-hour also broken. As you see here, we have broken the super trend, which was good since Friday, June 16th. We came back, we wicked, attempt to wick off the 6-hour, came back, we wicked down, broke it here, and it's been broken since Thursday of this week. And if we go to the 4-hour, which is even slightly tighter, the 4-hour also had that idea since June 16th. The super trend has been holding. It wicked off of it, here, and then it finally broke it. So the narrative break of that super trend puts us in a retrace idea as we speak here. And currently we have the cross up events occurring on the 4 and the 6 and the 8. So we're going to go back to the 12-hour here, and so the 12-hour still has this cross down event intact. But if you look at the candle where we're at currently, if we close a candle above 30,235, then we're starting to build that narrative to come back up. So unless in the next 12 hours, if the candle closes above this level at 30,235, then we're starting to curve our way out like an ice cream scoop, possibly to come up into these ranges and do a cross-up event on the 12-hour. This is where you start to see these narratives. So having the candle close beneath the baseline leaves this impression of this cross down on the 12-hour still in effect. If we look at the 8-hour, we're going to see, well, first let's just go through all of the oscillators. As you see previously, the disparity on the money flow and the RSI was, hold on, let me move this over. I want to have this open a little bit. Okay, so previously the money flow was beneath the RSI here and gave us that bullish divergence as we closed this candle, which caused us to come up here, and we watched the money flow come up to the RSI and basically get rejected, and now we have the money flow above the RSI expressing slight fatigue here on the 12-hour, which could come down for that suppression and open this Williams down further. And this is how you see the Williams alarm cascade into suppression of takeoff on the stochastic RSI. So this Williams overlaid with the stochastic RSI gives you some impression about the health of the stochastic reset takeoff and whether that will actually fully take off or get suppressed by the Williams. Now, when you get the Williams in this green oversold status alongside with the stochastic coming oversold as well, that's when you start to see that nice alignment for upside to be massive like this. And that's your ideal entry because your reward is more than your risk perceivably. And if you look here, it looks like more ambiguous because you have this looking to come down while this looks to take off, and which one is it? And so there's a less probability of it happening one way or the other. But if you look at what we were talking about in the narrative of the recovery of the wick, to me it's more probable we come and test this super trend / wick. And the money flow suggests that as well. So this meandering around shows that we need a hard reset to get to that green level to give some interest to the bulls to enter again. And if we go to the 6-hour, 6-hour is also getting that to that 50 rejection point. Money flow is above the RSI here. And the the leading MACD is that it just recently crossed up. So we're starting to get that cross up. We had previous cross up, cross down, cross up, cross up, cross down. So we've seen a lot of false signals on that leading MACD. We could come down a lot more on this Williams as well, coming out of that region. I'm going to take a moment before we go to the 4-hour time frame, actually, to go over this little bit of happiness here. This is also a free tool I used, which shows liquidations across 19 exchanges. It's 𝗥𝗲𝗹𝗁𝗁𝗀𝗋. I used it every day for over a year, and I kept it in a separate window like this. And you could see down in the bottom right here, about 27 minutes ago, 76K of bears was wrecked on this spike up here. You also see this purple line here. These are liquidations, and the gold lines are bull liquidations. And you can see 10-second candles. You can even see 1 second. But if you switch the time frame, you can basically see where the liquidations events occurred. And you can see CVD and all that fun stuff for free. So worth checking out. Another free tool I used to use back in the day. I'm trying to test to see if it lags my system. I used to have it with this on the right side of my screen where I could see the price too, and then I have my screen here. So whenever I'd be looking at something else, I could see whether liquidations and buy interest was coming in. All right, so the 6-hour cloud also starting to open up here in the purple nature, suggesting that we could be seeing this continue further down. This is where the ambiguousness comes, because we have this broken 8 super trend of the bullish trend, We have this coming down in a bearish kind of manner after meandering both ways, and then we have the cross-up event saying that we're going to go up. So you have conflicting, ambiguous signals on the 6-hour time frame here, suggesting that we could come up here to the cloud and possibly get rejected off of it. We talked about that 12-hour possible reclamation of this baseline to start to curve up to break out of this idea of going lower. So this is a make or break situation for the 12-hour candle close. So the 12 and the 6 are ambiguously fighting mixed signals right now. And if we go to the 4-hour time frame, 4-hour had previously crossed up back here on Saturday, 1 a.m. my time, crossed up, and it's been maintaining these crossed up baselines thus far. We had some bearish divergence that formed on the money flow here, and we started to retrace back down. We're attempting to make a second surge off the 50 level of the stochastic to come up here. And the Williams is flirting with the idea of getting oversold, and this possibly being a shoulder, head, and a shoulder, shoulder, head, and a shoulder out of here. Sometimes you can see the patterns on the Williams more clearly than you can on here. You see like a triple bottom, right? And you see a shallow bottom, a thicker bottom, and then a shallower bottom, and then this is like your shoulder, head, and shoulder. So the Williams is a reflection of price. Stochastic RSI is a reflection of the RSI peaks and valleys. So this one shows more accurately the patterns of the price action. So you can kind of see the patterns, the double bottoms and the double tops in advance. This is why we talked about the fertile crescent idea of the double bottom here with the rising sun. So ideally having something like a double bottom here with a rising sun event gives you more guaranteed upside, similar to here or here, where you have this double bottom. You have this double bottom cross up of the Williams. This was back in April, and we were saying this was a more likely play. And these more likely plays give you that 10% boost to success. So this is why having the Williams in that fertile crescent of the peak of the valleys between the mountains with the rising sun event is where it's at. And so we're not currently there yet. We're not currently there. We did have the rising sun. We got a little bit of a taste of that fertile crescent, but just not quite there. But are we going to see this shoulder, head, and shoulder push its way out of here is the question. We did lay out for you that pool yesterday and the path of this coming up beyond this region to this little bit of happiness up here at 30,645 for the bullish trend-based fib levels, the 236 holding and potentially pushing up to here on the 4-hour time frame. If we go to the hourly, hourly cloud had this previous resistance to fight off. As yesterday, as we were into this thickness of the cloud, we said we were likely to reject and come down here, which we did. So that was an accurate call. And basically now the 236 bounce. How far does the bounce take you? Do you get rejected off this hourly ATR level at the 30,350 level and continue your path to the downside, or not? The hourly time frame is getting overbought here. It looks like with just the weekend liquidity. So for the weekend times, the pools don't really open in such passion because you become a easily detectable fish in the water that they could come back to. So it looks like they're coming to this if we zoom in here, so it looks like they're coming to this 26 million up at 30,334 and 30,320. These two little 100x pools which open back here and could possibly still be open as a short. They came back, faked them out twice, and if they're still open, it looks like they're coming for them for good. And you did open up some longs here as they did come to this, so they could come back for these guys later. When it's threadbare, they can just come take these small pools in these small increments and not hesitate to go sideways. So this is what happens over the weekend as you get low liquidity. So it becomes more treacherous to enter because your position is more visible. All right, so holding this, this is why I have the 0.65, the 706, and the 786 rejection levels, because these reject, and the 706 kind of gives you that trapdoor release or pump if you hold the 706. So if you hold the 706 and flip this super trend level and start closing out candles above 30,350, then you're going to likely burst up to that 30,750 level. So basically seeing how you hold candles above that 706 or not. And as it stands right now, you're overbought on the hourly, and the cloud is shifting in a manner here. Are you trying to reclaim it to come up? Slightly ambiguous for weekend price action, not really clear as of yet. -15-minute. I think we're gonna just go sideways until the weekly candle close, and then do the sweep of one side and then pump it, or sweep of the other side and dump it. So if we go to the 15-minute here, 15-minute attempting to double top by the curvature of the stochastic here. Williams is overbought, could come up on the average a little bit more, and then you get that alarm potential like here. Let's do an analysis of total and the USDT dominance and all that fun stuff, and then we will come back to this for a wrap up. Let's see how the chat's doing. 1 a.m. Sunday. Wow, thanks for joining us. What's up, Meluel. All right, so total. So we didn't reach into this gap just yet. We did come up to the range high here and then rejected off of that. And now we're creating what, like another shoulder out of here perhaps to reach up into these regions. If we go to the daily time frame, the total we have, let me remove this really quick. It did not go exactly to where we wanted, but it did go up to a level. If we look at the cloud on the daily time frame for crypto market cap, we see that it's still thick to this uptrend idea, even though we are consolidating sideways for the last 17 days, essentially sideways. So you get up and down, but within this range. So are we going to reset? It does look, as of this moment, we have something like this going on. That could take us to the downside if we don't. That would come test this entire level, but that's just one idea out there as it fatigues potentially. But we are holding this super trend, not super trend, the adaptive on the total market cap. It's come down to it, and the last time we saw that was, we had an attempt at reclamation of that. We had one solid reclamation back here in 2021. We had a fake out reclamation with the bearish retest back in January, which dumped us harder of January of 2022, and then we had a attempt to reclaim it on April Fool's, and then we broke down out of it. So we haven't, and 2022. So we haven't seen this adaptive moving average come to this position in over a year. So it's a make or break point for another trend to the upside or not. So if it fades at the adaptive, then we have some downside to reckon with. If we get out of it, then we can see a similar pump up from that point. Alright, so this daily retrace pool from this impulse retrace puts you up in this category. We did technically already come into that trillion, 1.3231 trillion market cap, so we can kind of delete this now. I think it served its purpose, so we're going to start to be more precise with some ideas of this holding or not. So if we go into here with our trend-based fib extension level, we can use it now from this daily impulse and retrace idea. So holding the 1.156 trillion level can slate us to come up into these resistance regions at 1269, just above this range, and putting us in the price target up here if we do break out of this level to come up to that region. Now if you look at it on the other side of the equation here, you could say that this is a correction, and if we cannot break the range, this impulse to the downside with this also slates us for basically the 236 region where we're at right now. This level could project us down into these regions. It looks like we already reclaimed that idea, so we came into that bearish order, like the bullish order block down at the bearish trend-based correction level, and this is why these ABC waves kind of play out. It's just a retrace and continuation idea down to here. Okay, so it just gives you the nice math for that. So it looks like we already negated this entire thing pretty much, so we'll just delete that. But that's how you would do it on the bearish end of things. You have this impulse, and the retrace back up tells you where it could go, and it went there. So this is the same kind of concept. It impulsed out and retraced here, and so if it holds that 236 level, then it could go all the way up to that 1.312 trillion dollar market cap. So as the daily time frame makes this level reclaim, do we start to come down and reclaim this wick a little bit and fake out with that shoulder, head and shoulder, and then surge up to this region? This 236 level needs to hold for any type of scenario where this occurs to happen. You currently have the cross down event, just like Bitcoin, in effect, possibly suppressing this from takeoff, coming down to kiss that cloud as we like to do. So coming down to kiss the cloud could be the order of business before we go up to that level. Just putting that out there. So coming to kiss the cloud, even though it's strong, it's just a confirmation idea that happens time and time again, similar to here, where we came back and we kissed the cloud and continue, kiss the cloud and fail. So this, we broke out, we kissed the cloud and continue. So even if you break out, you come back to that cloud at some point in time. So we've been going sideways. Is that point coming soon? I don't know, but it would make sense if you go higher that you go lower first, similar to what we did here. We dropped it before we pumped it. All right, so let's go to the BTC dominance and see how that's slated to go. It's been holding this super trend level from June 6th on the daily time frame. So we've been holding that nicely in terms of dominance for Bitcoin being strong above the 50% level of this daily projection. So it looks like it could even go higher as people lose faith in the meme coin game and see it as lack of utility, just slot machine cash grabs. For myself personally, I can relate. So yeah, unless there's utility proven for some of these newer projects, it just seems like it's like you got Pepe 2.0 for right now, for example. It's a mockery. I mean, let's just be real. But it's I know that all of the financial world in money is fake, but you know, at least have a utility, at least have something. It's a joke at some of these coins. So anyway, the USDT dominance, we were seeing that this correction coming to the 618 and bouncing did occur. We had that for you in advance as it was back here or something. So we did have this bounce. Are we going to continue USDT dominance going up? If USDT dominance does go up even slightly, that means people get kicked out into USDT, as the onboarding to exchanges is limited now by a lot of countries. So spawning new USDT means kicking people out of trades into USDT more likely than not. So this retrace idea over the last 3 days for Bitcoin was kind of kicking people into USDT. So when you see the dominance poised to go up and USDT poised to go up, most likely Bitcoin's going to dump. And that's what we pointed out back then. When did we point that out? That was last Sunday. So last Sunday we were talking about it coming down some more, but then basically knocking people into USDT, which it did. So where is it wanting to go now? Let's take a look at the 12-hour time frame and start to see. Looks like it's reclaiming the cloud here with the curvature similar to Bitcoin's opposite curvature, which is like this in a bullish manner. And we could be coming back to do a shoulder head and a shoulder out of here on the 12-hour time frame. 12-hour is starting to double top with the money flow beneath the RSI, so we could get this to pump up into price action continuation here. We already got half that move pretty well with this nice 12-hour candle here. Are we going to start to see this curve and do a kind of thinning at this point, maybe on, I don't know, Tuesday? And then we see that kind of retrace idea come to fruition off of here. If you do an order block, if you do this 618 bounce-a-roo, it still has to come back to a certain level. The bearish trend is still intact off of that wick exactly. So this is still the trend to the downside until otherwise. This already played out, so we can delete that too. So we had that reaction off the 618, which was quite nice. So are we going to see a continuation of this break of structure on the smaller time frame and this shift of the cloud? The cloud insinuating that it will continue higher on the USDT dominance, which means people will get kicked out of their trades if that is the case. We did fail this adaptive, so coming down here a little bit more. Cross down on the 6 hour suggests coming back to kiss that cloud as well. Six hours coming down. 12 hour coming down too. Hourly has reset. Interesting, you had a rocket here, I didn't even notice. So the rocket appeared and printed and held completely. Somebody was in the, shout out to some member of the group who had a rocket ship print on Ape play out finally. So the rocket ship on Ape was setting them up, but Bitcoin dumped and it messed it up for them, but eventually it played out like this. So yeah, the rocket ships are pretty spot on. If the market plays ball, if there's no curveball being thrown, then for the most part they play out. And it did a double bottom off of that, so if you had taken profits there, that would have been an ideal entry off the 618 double reaction. So do we see a reaction off the 618 here for the USDT dominance? When it comes down here, it's kind of an invert of like what's happening with Bitcoin, right? Bitcoin's kind of like going up right now into that cloud resistance of the 12-hour, and there's this spike down. It's kind of opposite. Like if we go to Bitcoin, you know, Bitcoin looks like this, USDT dominance looks like this. It's the same kind of thing. As people put their USDT into Bitcoin, if USDT is poised to go up, then it means it's going to knock them out of the Bitcoin trade. So right now they're putting the USDT in to go up to this pool by the looks of it and come down to this 618. So if we even use that Fibonacci here on this retracement from this wick to that wick, that 618 is at 30,809, where it could reject off of if it comes up to this region. All right, so yeah, for the sideways action of the weekend, basically we are going to ping in the liquidity here, taking a look at these pools. You have the partner in crime of the 50x at 87 million at 30,536 that they could come back to. It looks like they just liquidated those 28 million we were talking about a moment ago. It hasn't even had time to register yet. It just went up to those guys. So these 28, 26, and 23 million are off the table.
Fatality.
Yeah, and so those guys are gone. And if you go to that free source that we gave you at the beginning, CoinGlass liquidation data, you can see where all those people get liquidated and by the hour or the 4-hour. Or if you want to use that free resource, v3.aggr.trade, you do have that as well. It will tell you who gets liquidated, and you can set by what amount. I think I set it above 50k people, so a 76k bear. It has the bear icon, got wrecked about 51 minutes ago. So all right, so are we going to break out here on a weekend, or likely go sideways and reject and reset some of the oscillator off that liquidation on the 1 minute that we saw? There's no immediate reason to come back to the 21 million just yet. They could spike up, grab some of this up to the 30,536 region, and then consider coming back down to this level on the 1 minute. On the monthly, on the external liquidity pools, you suggest, as we said before, coming back to reclaim some of that wick before going higher. If you go to the external liquidity pools of the 2-year and you start to see that 450 billion up above, the overall tone is to go up higher at some stage. When is that stage going to be set to lift off? I don't know. I think coming down into this region of the liquidity to knock out the longs over the last 19 days makes the most sense to me, and the reclaiming of this wick idea. So is this a A, B, C to the downside, and this consolidation is just a B wave to go lower? It could be. Hi there, kiddo. You wanna? Been building a soul position. Let's look at soul. Soul. Been hearing about soul lately. Yeah, soul looks like it's been doing some damage, broke the range completely, and now you're on this path of a bullish trend on the daily, and yeah, you're slated to kind of go higher. let's look at the weekly time frame and make the descent through. So you had a previous cross down event which proceeded in dumping by 42% and then retraced into some of these candles, held this overall weekly bullish trend to the upside here as we're curving the cloud in this manner. Cloud started to shift bullish here at this point. For the last 3 weeks we've had 3 white soldiers. I don't know why they call them white when they're green, but okay. But yeah, they are starting to appear on the weekly here. If you close the weekly time frame, the weekly could be slated to continue further, shoulder, head, and shoulder. If you do this like cup and handle and create the handle on the daily time frame is overbought on multiple indicators, including the RSI and the money flow above the RSI, and the Williams up here getting to a point where it could fatigue. So I would be careful about potentially seeing a fatigue and a retrace at some point. If you were to retrace, where would you retrace to? Well, the cloud is a healthy target, but on a daily time frame retrace, that takes some time possibly for that to occur. So if we go down lower, 22-hour time frame is extremely overbought as you enter into resistance. It's trying to put in newer highs upwards in this region. Somewhere between 23.34 and 23.94. Possibly trying to get some highs put in before it retraces, perhaps. If we look at the 22-hour time frame, we are above the Keltner channel and above, we're starting to come into the resistance of the adaptive. Hi there. You want to say hi? No? 12-hour. 12-hour already reclaimed the adaptive and confirmed it for the most part. We're reaching these points where the baselines start to get tight and possibly above the price action is where you start to consider taking profits and looking for that retrace idea. Kind of interesting that the Sol is taking off like this. I wonder what is going on with the project. So you're starting to see the fatigue potential kick in with the 6-hour here as we approach this resistance point of the range here at 22.15. So if we come back slightly into some of these vector candles, like down here at 20.35 or something, start to come back into the cloud. The cloud is starting to taper slightly here on the 6-hour. If we go to the 4-hour time frame, 4-hour time frame overbought on the Williams. You're meandering your way up here on the 4-hour stochastic. Are you trying to get that last hurrah, that extended M pattern, kind of like, you know, and then retrace down? Let's see what's going on the hourly. Hourly trying to play out off the cloud here on the hourly time frame, starting to curve up. Ooh, and you're getting a nuke live on the stream, a nuke on Sol. Nukes do play out as well, so, but what you want to see is on Momentum Master A, if you're new to the idea, then you want to have the higher high or lower low monitor, the monitor higher high or lower low on. And then basically if you're making higher highs, you don't want to really short a nuke into higher highs because you're breaking into novel range territory. So it has targets it wants to meet. So when it wants to meet these targets, it will meet the target. So you don't just short blindly into a nuke like that. You wait for a nuke to close on a higher time frame, And that nuke closing on a higher time frame without making a higher high is where it's the sweet spot. So similar here, you had a 6 print on an hourly time frame, you weren't making a higher high, so you had a little decent pullback for 3% or so. And same here, you didn't make a higher high, you're printing a symbol, so you go back. So if you're not making the higher high and you print that symbol, that's what that higher high monitor is about. And these triangles let you know when you're making a higher high. So interesting little feature if you don't want to look left, if you're on your phone or whatever. It's a interesting feature. It makes my screen busy, so I turn it off and I kind of know what I'm looking at with the range here, so with these green lines, so I don't need it necessarily. But if you're newer, it might be a helpful feature, or even just if you want to have it on for your phone, as I said earlier. So yeah, the 15 minutes overbought, the 5 minutes overbought, the hourly is getting overbought, the 4 hours overbought, the 6 and 12 hour overbought, and yeah, RSI overbought, Williams overbought on the 6 hour. This is where all these factors come in, like more factors than the brain can hold with the stochastic array. So it's giving you that information with the symbol coalescing with all these time frames. The daily time frame RSI is overbought, Williams is overbought. If we look at the weekly is not there yet. So it doesn't necessarily mean it's over, but it means that a retrace is in the works when it reaches a certain target. So yeah, just something to think about if you're building a position to trim and possibly look for re-entry off of one of these cloud ideas or fair value gaps. If you don't know how to find fair value gaps, here's another free indicator. It's fractal break imbalance fair value gap, liquidity void. You turn it on, it will show you the fair value gap. I just did the bottom of the fair value gap because I know where to look with the wick to the left here, but it does the math for you if you're trying to figure it out. And on that note, let's go back to BTC because my kids are bothering me, which means they want me to finish. So you're watching it? He's watching it. He's watching the stream. All right, so yeah, okay, gotcha. So as we see this potential coming up into these resistance points, we already liquidated the the shorts here, these little small baby pools that opened up over here at 30,236 and 30,155. They're now gone. There's another long pool opening up right now into resistance. Not a good look for longs to open up into resistance like that. So that $22 million at 100x at 30,200, that is their liquidation point, opening up now at 30,374. They could come back to that pool at some point over the weekend. And so coming into this resistance, meeting the hourly, you got the 5, the 15, the hourly, and the 4 hour approaching overbought status. So we broke that super trend idea. If it closes with that intact, then this super trend and the 706, as we talked about earlier, slates you to put you up in here. If you hold this level of the super trend, the bearish super trend, and this 706 does not get permission granted to go up to this region, then you're slated to come back down to the 236 and simply range trade for the rest of the day. Okay, let's just put that down there. So as it stands right now, we are just range trading for the weekend, so I don't expect any big move to occur until the candle close of or into the candle close of next week, or this weekly candle close. So this sideways price action is establishing a symmetrical triangle slash inducement pattern to enter. We did go over the levels quite nicely, I think, for where the imbalances lie to the downside. If we're going to 29.4 to spawn some divergence slash recovery, the wick, or are we going to go up into these regions and take out these guys and go just take off, create this double bottom out to 32K from here? So I mean, this could be your bottom. You never know. This could be it. You could be, that could have been all she wrote, and then you're gone, baby, gone out of here. Only time will tell, and time is of the essence and of the mind. So go enjoy your time with your family and friends, and I'll do the same. So we are getting the cross up event on the 6th hour, so watch out for that. You're getting the mixed signal of this cross up event, not to be ignored. Not to be ignored. If you're in a short, please be careful. And if you're also in the ambiguousness of the 12-hour, also in the next 10 hours, where is this going to close? Is it going to close above this baseline and start to make its reclamation path out of its destiny for the cloud to curve, or not? That is the question. Well, ladies and gents, I must bid you adieu for the weekend. So I cannot call it as of this moment just yet. I'll keep you posted. I think we go sideways for the time being, and we'll come back down out of the range here a little bit and just ping in some more liquidity as the weekend does its thing. So, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the precision, the accuracy, and all that fun stuff. And we will catch you on the flip side. Peace.